Hello, hello, welcome back. A surprising move yesterday. Actually, Elon Musk announced that he is actually thinking of buying Twitter again at the price that he originally announced, which is insane to even think about that. Now, Twitter actually surged in the news. It went up like 22%. I would say soared really. And today I don't know if it's gonna follow through. So you have to be a little bit careful here if you are looking to potentially capitalize on such opportunities. It may actually be a little bit late. Now you don't really know. You can kind of see what's happening with the trends because more people could potentially try to enter the stock today and then drive it upwards even more. But it's a little bit of a riskier game now that it's already up 22%. Now let's see what happened with Elon Musk. What did he say? And also read some news and actually examine some of the things that have been happening around because they're very, very interesting. So I'll show you what I mean shortly. So over here, you will see that in a surprise twist, Elon Musk has once again offered to buy Twitter. It's time to scrap everything you knew about Elon Musk. So he says he's willing to buy Twitter for 44 billion, which is the same price that he actually originally offered after having all these discussions about potentially fake profiles on Twitter and him actually declining to actually go through with the offer. He seems to be accepting to pretty much continue the deal that he originally submitted. And also now we may be looking at him actually becoming the new owner of Twitter. As you'll see here, Elon Musk says Twitter purchase will accelerate the creation of X. He's long discussed everything up, which is extremely interesting here. That's this piece of information I wasn't aware of, frankly. And one of the reasons, of course, that he does want to buy Twitter eventually is the fact that he's looking to avoid a court battle. That makes a ton of sense right now because he will have a pretty deep court battle because of this offer that he made and they retracted. You cannot just do that with public companies because of course you can drive the price upwards or downwards. It's manipulation. And so he would have a court in his hands unless he goes through with his original offer pretty much. Now, he followed up news on his renewed offer to buy the company with a tweet claiming the move would accelerate the creation of X, the everything app. Twitter probably accelerates X by 3 to 5 years, but I could be wrong, is what he said here. So, as you'll see here, he told the shareholders he had a grander vision for what he thought X Corporation could have been back in the day. So I don't know whether this is going to be the case, but maybe he's trying to kind of sweeten the deal for his sort of like Tesla shareholders already or people who follow him by saying that he has a grand vision on this Twitter purchase. Although the thing is, this purchase might not be that great for Elon Musk, and actually he probably is going to be overspending a lot by buying Twitter at that price. But you will see something here that the Florida hedge fund could reap around 200 million from big arbitrage bet on Twitter. Basically, arbitrage bets actually aim to pretty much gain the spread between the announcement of news, is what has happened here. And you will see that among the big winners of in Elon Musk's agreement, if he follows through with his deal on Twitter, is an activist hedge fund based in a coastal Florida city that was just wrecked by Hurricane Ian. Interesting that it is an activist hedge fund, actually. So, they bought a 2.4% stake in Twitter during the second quarter. The purchase of 18.1 million shares cost them about 725 million. And at 54.20, which is the price that Musk has agreed to pay for Twitter, their stake could be worth almost $1 billion here. So they are making quite some. Nice to see, especially if it is an activist fund and the funds are actually going to be used for a good cause. That's actually pretty nice to see. Now, Twitter employees are venting on social media and in private forums about Elon Musk's agreement to buy Twitter. And so you will see here some interesting remarks from some of the employees of Twitter. So let's take a little bit of a look here because it's interesting. So employees do not seem to be happy with what is going on. One of the employees actually, she said, I'm sitting on a 2023 company-wide strategy readouts and I guess we're going to collectively ignore what's going on. And complaining that the company's 2023 plans were now worthless. Of course, I mean, you would have these kinds of concerns that makes a ton of sense here. So they also posted a series of memes lamenting the Tesla CEO's return to the deal, including a joke about meta recruiters, welcome to Twitter employees, and an image of a young girl crying, captioned, me writing my emails today. So obviously there's a lot of going on, and it looks like the sentiment is generally speaking pretty negative over here, and as you'll see, overwhelmingly negative. One employee commented, cue the layoffs over here. So interesting to see. We'll see how this unravels, but they don't seem to like what is happening right now, Twitter employees that is. And Elon Musk selling Tesla stocks to fund his Twitter takeover is like giving away caviar to buy $2 pizza, is what is being remarked here, which I kind of agree with. I think it is a pretty bad deal here, paying that much over here. That's like me giving away caviar to buy a $2 slice pizza. And what's the reason behind this remark? Now, if you take a look at Twitter over here and its financials, they look rather bad. And its P ratio is going from negative to positive. It kind of depends on the quarter, I suppose. But overall, they don't really make money in a fashion that is a continuous manner, pretty much. They are losing free cash flow. Things are looking dire. They have quite some debt. Their net income hasn't been growing. Again, their free cash flow also hasn't been growing. It's all their revenue that has been growing, but not a ton, as you'll see here. And things are not looking very nice here for the company. Pretty much all the metrics here, the financial metrics, are in the negative, the returns and the margins and everything. And so if you take a look at our stock evaluation tool, which can quickly allow us to go through a company and see how much is worth, potentially the stock that is, you will see that the revenue growth of the company has been fine, and we could potentially even try like 5, 8, and 11 here with an average of about 16 in the last 5 years. And a net income margin, which is a problem here because it's going up and down a lot, as you'll see. Now, margins really depend on whether the company is profitable, of course. And this company is not profitable, like consistently profitable. And so when they are profitable, they are making some good margins, but in many situations, they really aren't profitable. So, and as you'll see, they have grown into non-profitability here. Now, when they are profitable, their margins are very high over here. So we do know that the company can achieve profitability, and their margins are high when they achieve profitability. So let's just go with something that is close to that and see what we get. 30, 33, and 35. After all, it is a software company, so they will be making high margins, that's for sure. Now, the problem here, as you'll see, the free cash flow, again, kind of a story of going up and down. And it's problematic to actually, again, use a free cash flow margin here because it's all over the place. Hence, I would have to go a little bit, I think I will go a little bit more conservative, 70, 80, and 90% of our net income pretty much becoming free cash flow. And annual return of about 13%. And I'm curious to see what we get out of these metrics here. And as you would expect with these metrics that are relatively, I should say, luxurious here for a company of this sort, based on what they are doing, I don't think this company is still a buy, and the current price is sitting at 52, which is basically the buy price. And the high one that we have here, which again has a margin of 35%, which is not consistent for the company, is $44. And even that is a red. So the company is overpriced, that's for sure. And this is why I feel that this kind of investment is kind of like selling caviar to buy a $2 pizza, slice of pizza. Now, will he be able to make something better of Twitter? Elon Musk, that is. I don't know about that, maybe. Because he is a magician, sort of. I mean, he definitely knows what he's doing, and he's good at what he's doing. So he may be able to transform the company and actually generate some money out of it. But he's overpaying, and that's not a great thing to see. Now, you generally speaking usually have to overpay a little bit in order to get a company of this sort as a whole, because you have to get the board to agree to pretty much give away all their shares, all their stock. So it does make sense to overpay a little bit. Now, is he overpaying a little bit too much? He may be, actually, especially based on the fact that last year the net income of the company was negative, so they actually lost money. He may actually be overpaying, and maybe even too much, frankly. Because again, these projections are very aggressive here based on what the company has actually been doing. and based on some years being negative, and especially the latest years pretty much being in a negative territory, things are not looking that great here. Now again, it may be a temporary thing because we are in a little bit of a recessionary environment right now, so things could be getting better for Twitter, but it does look like it's a business that's declining or has been declining. Hopefully he can reverse the situation. Do let me know what you think about Twitter and Elon Musk's acquisition. Leave a comment below. And remember to leave a like and subscribe. And as usual, you can basically get access to our tool by becoming a Patreon. All the links in the description box below this video. And I'll see you in the next one, guys. Make sure to take a look at this video that I made earlier, and a lot of people have watched already, about Alibaba and what Kevin O'Leary thinks about it and why China, actually avoiding China, is a very, very bad mistake. And I'll see you soon. Bye-bye.